So here's a more interesting chart, and everything really hinges on this, and it's the US commercial customer count growth. So we have the full line just showing absolute numbers of customers. So this one, we recorded 221 US commercial customers, and that's a quarter-over-quarter growth of 22%. And as we can see, since the launch of AIP in Q2 23, it's really started to accelerate, and
Yes.
I expect that to continue. So above 20%, I would be satisfied. I don't want it to top off at 22, because we know that they've actually been increasing the rate of boot camps as well. So there's no reason this shouldn't be above 20% quarter over quarter.
Vince, any thoughts on this one?
I mean, I might be wrong, but I keep thinking that they're going to do a huge surprise on the customer account. Like, I wouldn't be surprised if they would have 300 or 350 customers on this quarter. And it might sound insane, but if they're doing 5 boot camps a day and they just have one new customer from every boot camp, because what I don't know is, like, are customers repeating boot camps? So is it like the same customers on like 10 different boot camps, or is it like new customers every time? Because I think that if it is new customers every time, it's not unreasonable to think that they can close one from every boot camp. And how many boot camps did they have this quarter? 500, 600? Even if they close one, I don't know, every 5 boot camps, then it should be 100 new customers.
That is true, but not in such absolute terms, because they have to record revenue in the trailing 12 months to be counted as a customer. And even though you're onboarded, I don't know how their like payment cycle looks like. We know that most customers pay Palantir yearly around Q4. That's why we always see such boosts in free cash flow in Q4. So I'm not really sure that it shows up like, well, we had a boot camp yesterday and today we're using Foundry, so we're going to get billed today. So I don't think it translates that way. But I believe that you're right, that over time we're going to see like a massive jump in the customer count, and it's just going to compound from there. But I'm not really sure it translates like as of this quarter that way that you put it.
Yeah, I guess that we should see, because my point is that the boot camps have been like S curving, and like we should see, because like they started AIP in Q2, so then we see in Q3, Q4 we start to see the increase, and then this Q1 we should see the increase from Q4, and already then it was like a very big number of boot camps. So like you can see that the curve on the last 3 like is getting like quite sharp, and like I am sort of expecting like either that it's going to increase very sharply, or that they as you said, like if there's a huge delay on this, that they do explain or mention what they expect the delay is, and I'm expecting that we should get numbers from the boot camps, because I don't understand if you have done 600 boot camps and we don't hear from the new customers and we don't see what's happening, then why are they doing them, you know?
Yeah.
So I agree with Amir. I'll bring the thing back up in a second. I agree with you, Amir. I think that I want to believe the customer count's going to explode, but you're right that unless they pay you in the trailing 12 months, they're not going to be a customer. So even if Palantir converted, let's say 100 out of the 500, right? Really good conversion. If they didn't pay within these 90 days of Q1, which most of them are probably on a pilot, right? Like they're still trying to figure out if they're going to pay, then they're not going to be counted as a customer. So I think that NVIDIA type of huge customer count quarter will come. Maybe it's a few quarters from now, if not early next year. But we're going to see momentum in customer count. And if we see momentum in customer count, top line revenue growth is, well, we'll talk about that. That is going to have to be guided higher. And if that's the case, I think that's what the street's really going to like.
Yeah, so that moves well into the... No?
Yeah, let's get to this one. So this is... Okay.
No, wait. I was going to put here. I just jumped. We can go back to the customer acquisition cost. So this ties into that. Actually, looking at US commercial customer revenue, we know that they boasted last quarter that they grew year over year by 70%, which is kind of misleading because if you look at Q4 of 22, they actually lost 12.5% year over year.
Wait, they lost
quarter over quarter.
What do you mean 12.5%? They lost.
So if you recall the last earnings call, it was a really huge thing that Palantir grew US sales, commercial sales by 70%, which they did in absolute terms. But if you look at the comparison, Q4 2022, they actually lost revenue quarter over quarter. So it's a really bad comp year. So in real terms, they grew more like 40% and not 70%. If you would like average the Q4 of 22 out, do you understand what I mean?
Yes.
So the 70% was a bit misleading in that way, even though it's technically true. It's just that the comp was very weak. Because even though we see, if we go back to the growth of the absolute customers, we can see that this is increasing sharply. It went from 4 to 12 to 22. But if you look at the revenues, it's still flat quarter over quarter. Like we're not seeing the AIP effect, which means, as Carp has been saying, like they're not really worried about charging the customers. They're just interested in acquiring customers.
Right.
I think that this quarter we're gonna start to see a difference here. I think we're move probably upwards of 15% here. Like we're gonna see an acceleration, is what I'm expecting here. We're finally gonna charge people for AIP. I think the product is proven enough. There are more than enough use cases. It's been almost a year, so I think it's time for Carp and the team to actually start charging for AIP, because we're not really seeing the revenues start to come in from AIP yet. There's some quick thoughts on that. What do you guys think?
Real quick, before we give our thoughts, I want to play this because you're talking about commercial growth and you have that 70% number. We had Carp say something. I just want to get everyone's raw reaction to what he said over the past couple of days.
Yeah, we do see a difference in commercial. We didn't give last quarter's results, obviously, but the quarter before we grew 70%, and we have a nascent and terrible sales force. We still grow at 70%. You know, imagine what a real sales force could do with those results. We do see a difference.
So that's what we just looked at. Like it's not really 70%, but yeah.
Right, because you're talking about the actual revenue, not just the growth percent or the quarter.
No, it is 70%,
like the comp.
but the comp, if you look at Q4 22 here, where my mouse is, they actually lost revenue.
Right.
So the comparison is really, really weak.
I get what you're saying. Yeah.
So Q4 2022, if you look year over year, like it's not hard to grow 70% if the comparison is like you lost revenue. So.
Okay, well, they guided 40% on US commercial. So we know that's going to come in at 40%. That would be compounding from Q1, which was 2023, right? I'm looking at your chart. That was...
Yeah, this is just the percentages. I don't have the absolute.
You don't have the actual number. Okay, gotcha.
Yeah, so I have the number. I have a chart here from Arnie. I don't know if maybe
share screen. I can show.
You see, Arnie is not here, but he's still here somehow.
He's here in person. Yes.
Yeah, like this is. Do you see the?
Yes, everyone can see our DMs of us talking about selling options. Vince is like, I'm making so much money selling options. I'm like, yeah, no, that's awesome. Right, go ahead.
So you see, this is what Amir is speaking about, that they went from 85, 86, 88 down to 77. And this is the comp, that they compared this growth to. And even if they, let's say, because Amir is expecting a 15% quarter over quarter growth, so that's 131
15?
times.
Did I say that?
I think so. You said it, because on your chart it says 12, and
Oh yeah. Quarter over quarter. Yeah.
Yeah. So that would be times 1.15, 150. So it would be like 150 million compared with 107. So what is that? That's a 40.7% increase. So it's funny because it's like on quarter over quarter, it will look really amazing, but maybe on the algorithms, like the growth goes from 70% to 40%, which is maybe not. Yeah.
Which is actually equally impressive as Q4, just against a stronger comp, so.
Yeah, I mean, 40% growth is still 40% growth, dude. That's still incredible, right? Even if it's off of a little bit of a smaller base. So I think that revenue will do well. Is there any concern that they don't do well on US commercial revenue growth, or are we pretty sure they get to that 40% number?
I'm not concerned.
Yeah,
I'm also not concerned.
Yeah, I mean, most of their boot camps were in the United States, so.
I mean, we have some hardcore Palantir fans that frequently post LinkedIn posts from different companies after like attending a boot camp and their feedback from attending. And I think it's been so overwhelmingly positive. Like people are like, oh my God, this is groundbreaking. And that's been like a trend. Like everyone is super, super impressed. And you know that people talk to people, especially at those C-suite levels. So I don't know. I think word is spreading, and I think this is just the beginning of the S-curve, as Vince said, and we're gonna start to see some impressive stuff.
Okay, next chart. Yes, we know Drake dropped in the chat, guys. I can't listen to it because I'm talking about my true love Palantir, but Drake did drop his diss, and after this podcast is over, that'll be the first thing I listen to. Go ahead, Amir. What else we got to talk about?
Who is it dissing?
Teenagers. Who? It's like watching my kids fight. Who cares?
He's dissing Kendrick Lamar. You guys aren't from America. You don't get it, dude. Like
America.
Well, even if you,
Amit, no. We're over 30. Okay, it's not that we're from the US or not from the US.
Dude, it's not about age. This is a hip hop, bro. This is beef, dude. This is like if I beefed with Amir or something. This is more serious, but okay. Anyway, Amir, go on.
Yeah. Okay. So it ties into well. I want everyone to just try to understand what this chart shows. In short, it shows customer acquisition cost, which is really important to track. Palantir does not present this. I had to calculate it myself. And what we're seeing from Q2 and onwards is a sharp drop in customer acquisition cost, which proves to us that AIP is working. The boot camps are working. It's much cheaper for Palantir to acquire customers. And if you look like across the whole period here, you can see that this area of Q1 21 up to Q2 22, you can be like, well, it's not that impressive now because look back 2 years ago, it was so cheap. Then you're forgetting that this whole period was with the SPACs. So they actually bought this revenue. So they grew a lot in customers and revenue, but artificially. So this is not organic. So this shouldn't really count. So if we only look at absolutes, we can see that, yes, they're actually for real now growing under 10 million per customer acquisition. And I'm expecting this to keep dropping as bootcamps scale. So it might look a bit confusing, but basically the we hit the stop.
Let me see if I can break it down. So in Q4 2023, it cost us basically 3 million to get one customer, and they paid back 9.4 million. Correct?
Yeah, almost. It's expected that the customer will pay for itself after 9.4 months.
Oh, okay.
So after you spend money to acquire a customer, it takes some time for that customer to like pay that spend back. Like how much are you earning on the customer? So let's say that you invest $10 upfront. How long does it take to get that $10 back?
Right.
Is what this chart is showing.
Right.
Can I ask, because Palantir doesn't do traditional marketing, and like, how do you get this cost of 3 million per customer? Is it the forward deploy engineers that they like have to work on the customer on the pilot programs? Is it how?
No, yeah, almost. It's a bit of a complex formula. I have it in my. I don't know if you guys have read my.
Is it just sales and marketing divided by the number of customers, or it's more?
No, it's more complex. Let me get the formula. I have it in my Seeking Alpha article. But yes, they do have marketing costs. So basically, to get the customer acquisition cost, it's just the previous period. So when we say period, we mean quarter. So you take the previous quarter's sales and marketing divided by the current period's addition of customers. So let's say they increased 15 customers and they spent 50 million on sales and marketing. You just divide that. So that part is simple. The payback in months is way more complex. I don't know if it makes sense to try to read it out. You can read my Seeking Alpha article, but yeah, basically, how much customers are you getting for how much you're spending on sales and marketing is how you get this cost.
Okay, so what do you expect going into Q1? How this?
Yeah, I'm to simplify, I'm expecting the trend to continue lower. If we can make it cheaper than 2 million per customer acquisition cost over time, that would be really ideal. And the payback months is really dependent on how much are customers paying Palantir on average. That's what dictates like how long it takes them to pay back on average. So if we can make start to scale up how much we're charging customers, I think we're gonna have almost a one-to-one relation where like it takes like a quarter for a customer to pay for itself, you know. So that would be really ideal. But what I'm paying attention to is this moving lower? Are boot camps working? That's what I'm looking for here.
Yeah, and fundamentally, if boot camps are working, then the amount it takes to get a customer should be coming down, just like almost through economies of scale to an extent. And then if the pilots are more effective and they're streamlined, the time it takes for them to officially say, yes, we're ready to pay you, should also come down. Which makes sense, because if they're targeting SMBs as well, more downstream, those companies should pay automatically because they're not like BP or Airbus that has to get a huge contract. Okay, cool.
We can move on from this unless Vince had something to add.
Oh, no, you can go on.
Like it might look complex, but it's not. But it's really important to track this. So okay, moving on. What do we have? Here's an interesting one. What I call the safety net. I really love this chart because it shows something we frequently discuss on Twitter. And some people are really upset that the government is more than 50% of Palantir's revenue.
Mm-hmm.
And another part of the community is upset that the top 20 customers make up more than half of the revenues. They say like it's a concentration risk. If one of the top 20 customers leaves, then it's going to hurt Palantir a lot. I look at it the other way, like the top 20 customers are the ones that are scaling out the fastest. They are the most satisfied with Palantir. Like, I'm not really worried about losing a top 20 customer because they're so entrenched with the software that it's really, really unlikely that they're going to leave. So I think that this is more like a safety net. Like we can always count on the top 20 customers rather than seeing them being a risk, is how I look at it. And I look at government revenue the same. Like I'm really happy to see government be more than 50% because you know that government revenue is going to be there. Like they're not whimsical, like where something may sway their opinion by tomorrow, which like a normal customer might be. So I think these two metrics, I would like to see both still above 50%. It's going to be hard when the commercial customers are scaling so fast. It's going to be hard for government to stay more than 50%. But I also think that AI spend within the government will increase. So I'm expecting both of these to be more than 50% moving into whole of 24, actually, but Q1 especially. What do you guys think about this? Is it a risk that they're concentrating into top 20 customers, or is it more of a safety net the way I see it?
I mean, I don't think it's a risk, but I think that we all invested into Palantir because, you know, they can scale and grow into something really, really big, and they cannot scale. Like, scaling in the government will not be very fast, and if they're not getting new customers, then the future scaling is going to stop. So I would like to see, like, how do you say it? Like, I'm happy with the situation, but I would like to see this chart continue to go down more, because that would mean that they have a lot more new customers and they're scaling with new customers, which just shows that it's going according to thesis.
Here's where me and Carp disagree with you. We know that Carp has been saying for a long while now, I mean, we're talking 2+ years that I can recall, that he wants at least 5% of government spend within the defense space to go towards AI solutions. So if Palantir just keeps their current market share of the AI spend, like they don't need to grow, just keep their current spend. If we move to being like 5% in 10 years, government is gonna like still dwarf commercial. So I think government is gonna grow faster than, no, not grow faster, but it's gonna retain more than half of the revenues for 10 years to come. And I don't think that's bearish. I think government is really, really strong. I don't know if you remember my valuation model, where I show like how I'm thinking about that. Actually.
I remember.
Yeah. Okay.
Yeah.
So for people curious about the valuation model, I have a CKF article out.
This whole podcast is Amir pumping his CKF.
No. But for real, I'm expecting government to be really, really strong. Like currently, we hear figures that around 0.1% is going towards AI within defense.
Yeah.
Carp has said 0.5. Sham said 0.1. If that moves towards 5%, like slowly scales up to 5% over a 10-year period, I mean, government is going to be super, super strong. So no, I don't think it's bearish that it stays ahead of commercial for 10 years to come. I think it's really bullish that both are going to be super strong.
I mean, as long as the commercial is also growing really fast, I can buy this. And I think for me, it's more like the top 20 customers. I would like them to go down, because that means that they're getting, like we need them to get thousands and thousands and maybe tens of thousands of customers and scale with those customers. And yeah.
I can buy that one. I can buy top 20 being slowly phased out of the majority. I can buy that one, yeah.
I will say, I think that if you're investing in Palantir, you're investing in a defense contractor with commercial as a cherry on top, right? Like, and all of us knew this a couple years ago when really defense was the core business, and it's only becoming more important every single day. So, Amir, I agree 100,000% when you said AI is barely being spent in the government. And we know JATC2, the Titan contract. I mean, there's such a big rabbit hole we can go down, but the United States government is going to be spending tens of billions of dollars over the next decade in AI, machine learning, and trying to become the modern, essentially. Go ahead.
Now, hold on. I was going to say you invested into Palantir because they're a defense contractor. Like that was
no, like, but
for me, they were an AI company that was going to be the future operating system of,
yes, I agree. That was also why I invested. But regardless of whatever you thought you invested in a defense contractor.
Yeah.
Right. That's what I mean. So if the U.S. is going to be the modern pinnacle of forward defense and defense technology in the next decade, Palantir, like, who else is going to get that money? Lockheed, Raytheon. Raytheon already lost the prime contract to Palantir with Titan. Anduril just beat Lockheed, Boeing, and Northrop Grumman in another contract. And then if the U.S. ends up spending 10 or 20 billion, Germany's going to spend money, France is going to spend money, Sweden's going to spend. All these guys all the NATO countries are going to spend money, even if it's not as much as the U.S. And if all that money is going to Palantir, I find no problem with a lot of the revenue still being government. So I think it makes sense, and I think hopefully that continues to grow.